All right, all right. Doing a mic check here. Can everybody hear me? Let me know if the mic is working. Let me know if the mic is working on the chat. Folks, we're going to start here in a couple of minutes here, 4 minutes. We're going to be starting here with Chief Market Strategist Matt Maley. So just to let you know, we will be talking about trade ideas, market performance, setups, education. It's packed. This is a jam-packed session. So just make sure you're here. We're going to start in 4 minutes at 5 p.m. Eastern on the dot. All right, folks, we'll see you here in a few. All right, folks, the time is here, okay? I'm here, you're here, Matt Maley's here. What's going on, Lavin? Folks, so yeah, just to recap here, we're gonna be live with Matt Maley, Chief Market Strategist at Miller Tabak, 40 years in Wall Street, okay? 40 years, it's quite a commitment if you ask me. So we will be talking about trade ideas, options, education, setups, market discussions, market analysis, sector analysis. And basically, you know, this is going to be something that's going to help a lot of you guys out there. So Jason, yes, we are live. This is live. All right, folks. So I think Matt Maley is here. Let's go ahead and give him a proper welcome. All right. Chief Market Strategist, Matt Maley.
Damn, son, where'd you find this?
It is a shame for...
All right, let's go ahead and bring on Matt. I think he's in the back. Let me bring him on. Can you hear me there, Matt?
I can. I hope you can hear me now. I was hitting a few buttons. I think I hit the wrong ones. They can hear me okay?
Yeah, man. So how's everything going there in the Wall Street world, man? You're obviously in, in that space. What's the talk out there?
Well, everything's, it's this whole this market just keeps rallying strongly, and it's kind of interesting because really the next week or so is going to be incredibly important because we're bumping up and actually slightly breaking above the key resistance levels in both the both the S&P 500 and the NASDAQ. And so if they can rally a little bit further, it could give us a big jolt to the upside. Although, of course, if it fails, it's going to be a big problem. And but it's just interesting because we have a big inflation number coming tomorrow that could throw a wrench in the works. And then, of course, we have the Fed meeting and rate decision next Wednesday, which could be a big market mover, especially because the market is very similar. Market right now is very similar to where it was in August when the Fed, where it was at Jackson Hole, and threw a big bucket of cold water on the market. So we're at a critical time in the marketplace right here, and how things fare out over the next week and a half are going to be very important. How things move along as we move through the rest of the first quarter of the year.
Okay, yeah, I mean, they say inflation's coming down. Price of eggs is still double. So, I mean.
Yeah, I mean, I'd be honest with you, if the market goes a little bit higher from here, if it does break out a little bit, I think it'll be short-lived, just like it was during the other bear market rallies, whether you go back in history or just this past summer, of course, when we had that big rally from June through August. And it turned out to be a big problem. And the problem right now is that the stock market is still expensive, number one. Number two, inflation is still elevated. I mean, and people say, well, interest rates have come down quite a bit. Interest rates are down, no question, from where they were a couple of months ago. They're twice as high as they were a year ago at this time. And inflation, even though it's coming down, oil prices are still way above where they were. As we're going through the the post-pandemic time frame when oil was down in the 40s and something. We're above $80 again. It's going to be tough for inflation to come down as much as people are pricing in right now. And the same thing with earnings. And so far this earnings season have not been particularly good. It's funny, the financial press keeps saying, well, they haven't been horrible. Well, that would be fine if the market was pricing in horrible earnings. It's not pricing in horrible earnings. So at some point, fundamentals still matter. So we're going to have a lot of volatility going forward. And so that's going to be great for active traders and what we're doing here in the chat room.
Right. And for those that don't know, all right, Matt Maley has a live trading room where he's banking trades there, entries, exits. We got push notifications, the whole 9 yards. Matt, a lot of the people basically want to see some of the trades. They want to see the strategy, how to use it. And for those that don't know, Matt Maley has every single record here at Benzinga. The biggest trade percentage, I think FXI is some Chinese ETF, like 7,900%. Insane. Like, I can't even make the math. Like, I get a headache trying to figure that out. So but yeah, Matt, go ahead and show the folks here your strategy, how you do it, and then we can get a little bit into the markets. I know you have an interview with CNBC, so I know that your time and everything. So we appreciate your time. We appreciate you being here with us, helping the little guy, helping the average Joe get ahead. So take it away, Matt.
Okay, great. I'll just do my screen share if I can. Whoops. Okay. Bang. And there we are. Okay, good. This is what I'll just, before we get going, I'll just say this is about this is the Bloomberg, the screenshot from the end of the day on the chart on the S&P 500. And I'll just talk about what I was talking about, how we're such at a key level. Here we are at here's the S&P 500, which of course has been trending down for quite some time. But you can see that we've started to break slightly above that trend line. Whenever you break a key support or resistance level, it always has to be a meaningful one. When you get a very slight break, it's not important. It's not that compelling. You want to see a meaningful break. Well, look at this, how we see this purple line there? You start to lose it in here, but that's the 200-day moving average. And that's basically just under a full year worth of trading. Obviously, we don't trade every day. There's about 220 trading days in a year. The 200-day moving average is one that people look at very closely. And you can see how it got slightly above it at the beginning of last year. Beginning of last year, and then slightly above it again at the beginning of the second quarter. Each time it failed and rolled over. Then, as we moved up a couple of times, we got right up to it or only very slightly above it, and roll back over. And you can see, again, this yellow line is the trend line. And we're getting, again, just slightly above it. and I don't want to make things too busy, but see that green line that I just pointed to, that would give, you see how this made a higher low? That's very good. If you can follow that with a higher high, plus breaking these two lines, is going to be a very important and bullish, at least on a near-term, intermediate-term basis, bullish development. But you see how this is such a key line, how we, again, it's broken slightly above it. If we can get that final push above it, it's going to be bullish on a near-term basis. But if it fails, look what happened. Obviously, when it failed here, it got crushed. Here, it got crushed. Here, not crushed, but it fell pretty darn hard in December. And so it could be another big problem here if it rolls back over. So that's what I'm talking about when we're facing the market. But what do we try to look at? I mean, and I'm going to give you examples here. One that we just had this week, and we've had over time. I'll show you that FXI trade on a Chinese stock market. But my background in the marketplace is one that's, I think, quite unique. Besides working here with Benzinga, I'm the chief market strategist at Miller Tabak. You may have seen me on TV. I've been on CNBC hundreds of times. Same with Bloomberg TV. I'm going to do a CNBC Asia interview today, and we might even keep you guys on while I do it. We'll see. The early this evening in about an hour, and I'm also tomorrow morning. If you're up early, 5:40 a.m. is where I'm scheduled to be on Bloomberg Radio tomorrow morning. But yeah. But again, what my background is that I'm a trader by background. I spent the first 25 years of my career on the trading desk. At the first 15 years at Salomon Brothers, and the next 10 years at Merrill Lynch. Now, Salomon Brothers, if you're younger, you may not have heard of them, but during the 70s, 80s, and 90s, it was the most powerful trading desk on Wall Street by quite some margin. Eventually got taken over by Citigroup, or by Travelers, and then by Citigroup, et cetera. But I worked there for 15 years. Obviously, I wasn't there in the 70s, but I was there in the 80s and 90s, and also 10 years at Merrill Lynch. So 25 years, and I was covering the biggest trading desks on Wall Street, the institutional desks, the biggest hedge funds, the biggest hedge fund, the biggest mutual fund, the biggest mutual fund, plus other big hedge funds and mutual funds, as well as insurance companies, banks, et cetera. And you really get to learn for what, the long-term thing is always important, but for active traders, you really got to learn not what should happen theoretically a year from now, or 3 years from now, or 5 years from now, what is going to happen over the next, couple of days, couple of weeks, and in some case, couple of months. But usually next, for short-term, trading, you really have to concentrate on what is happening, not the theoretical aspects of it. And that's why I learned, boy, if you could get your head cut off real quickly, if you don't know, if you're trading short term on long term theoretical things. I mean, theoretically, the oil prices were going to zero, right? In October of 2020, I was pounding the table, telling everybody the oil market not only going to go up in a short-term period, over an extended period, and I wasn't using the normal fundamentals of the day when people are saying that fossil fuels were going out of business. I said, yeah, eventually they are. But not anytime soon. And we cannot, reverse or move over to away from fossil fuels in 5 years or even 10 years. And the group was under-owned, the technicals. And so my point is, I use the fundamental analysis very extensively. You have to, of course, it always comes down to fundamentals. But we use technical analysis. And I'm telling you, every great trader who's ever been a trader has used technical analysis extensively. Not solely, but extensively. And you see that by any of the great hedge fund managers you've heard, whether it be Paul Tudor Jones or Stanley Druckenmiller, you name it, all of these guys use it extensively. And you use positioning, you use sentiment. All these feelings are very, very important, so you can get what's really going to happen over the next couple of days, next couple of weeks, or next couple of months, rather than what should theoretically happen. Because the market, no matter what they tell you on TV, the market is not always right. It's only always right eventually. Okay, I mean, obviously the stock market wasn't right at the top in early 2000, 1999, 2000. The market wasn't right at the bottom in 2003. The same thing in 2007 and And, at the bottom in 2009, you wanted, those theoretical things are fine when you're in those long-term trades. And everybody wants that bucket, that bucket where they're having that real long-term viewpoint. But if you have the inclination and the time and inclination to trade a little bit more actively, we were up we were up big last year when most, obviously most investors were down. And the reason was, again, we combined all these different forces. Now, I'll give you an example here. I just want to go to my other, sorry here. I just got to move. There's some things that I can see that you can't, that are on my screen here. Whoops. Okay. Let's just go right here. I'll pull this phone right up and I'm going to blow it up so you can see it a little bit better. Whoops. Bang. Move this too. There we go. Okay. This was TQQQ, and we were talking about. I mean, one of the things we're talking about this week, of course, are earnings. We have a lot of earnings have been out this week. A lot of earnings are coming out. Well, we had Microsoft coming out, and this was so on Monday. I knew they would be coming out on Tuesday night. So Monday we came in and we said, well, the stock had a big run, and so you can do a couple of things here. You can buy the Microsoft puts or calls, but I felt that the stock was the Satya Nadella had come out. They announced their big layoffs. Satya Nadella, the CEO, he had announced their big layoffs just over a week ago. He said, "Hey, we're facing 2 years of headwinds. So okay, let's go look at the Microsoft puts because I think this thing is going to react poorly to its earnings report." Well, then you look at the puts in Microsoft that everybody was worried about that they were going to report. So the market makers put a huge premium on buying the puts or the calls in it. I mean, they were predicting a 6% move. So if you wanted to buy puts, it cost you a fortune. Want to buy calls, it costs you a fortune. So instead, we went into the TQQQ puts. Now, what those are the leveraged ETF. The TQQQ is the leveraged ETF on the QQQ, which is the NASDAQ 100. Of course, that's where all those big cap tech stocks are. So I said, well, these two QQQ puts are much cheaper than the Microsoft puts. So as a proxy, let's go ahead and buy those. So we did. We bought those late on Monday, about 2:20, just before 2:30 on Monday. And you can see as we went through the rest of that day, they kind of bounced around. They went up, down, sideways. But we were waiting for the big earnings report that came out after the close on Tuesday. The next morning, the Microsoft opened down, Texas Instruments opened down, and it came in. And these things were up. Now, again, I didn't buy them at the bottom. I didn't sell them at the top. But right here at about 10:46, I think the time was at 10:45-ish, we came in and we sold them for around an increase of 170%. Now, a lot of people sold all of their puts at that time. I have to admit, I have to be honest, I did not sell all my puts. And these things sold off as the day went on. And I was kicking myself all the way down. But because I want to make, I have to be honest here. I can't tell you that I take full credit, but 170% worked out very, very, very nicely. And again, especially for those who sold all or most of their puts at that time. But, just to go back in some other instances, and Rodrigo mentioned the situation. Excuse me one second. Let me just get out of that. And we want to go to, he told you about the situation where we had the big trade on the FXI. Let's see, I go way down here. And the FXI, what the heck is the FXI? The FXI is the ETF for the, there we go. The FXI is for the ETF for the large cap tech China tech stocks. And you can see what happened in the FXI as it was for the China stock market. It just got crushed in 2021. You see how we're talking about the end of 2020 through early 2022. But through 2021, it was just getting creamed by their own government. Their own government was cracking down. Each month they cracked down on a different industry. It started with Alibaba, and they went through all these different industries. And each time we would try to back down, they smacked it down again. And it was just getting, every time, and so what I used here was technical analysis. And this is what's called the RSI chart, the relative strength index. And you can see every time it gets down to that green level 30, whoops, sorry about that. Let me just escape here and get to that chart again. Bang, and there we go. Sorry about that. Okay, so anyway, every time it got oversold, when it gets down to this 30 level, you can see how it would get, that's why the line is green. Go ahead and buy. It's oversold, buy. See how it's there? The stock went up. And these might not look like, but these were, 10% or more. And so these were good moves. The same thing when it got oversold, it got up to that red line, 70. That's sell, stop. It's a red, stop. Okay. And so you can see how it got oversold there. It got very oversold way up. I'm sorry, very overbought up here. Got somewhat overbought here. It was sold off. But look how oversold it got here in March of last year. It got the most oversold ever. This thing says last weekend's chart. Last week, that was because I did it a year ago, but it wasn't this past weekend's. But here it was in March of last year, the most oversold ever. And this happened because the market got, not because the Chinese government had done something, because the US government had done something. We had gone in and told them, hey, we're thinking about delisting a bunch of your stocks, and the stock just fell out of bed. Now, China, they don't mind knocking their own people down. They don't want somebody else doing it. And I knew with this thing being ridiculously oversold, it had to bounce back on a technical basis. But I also knew the Chinese government would come in and support their stock market. And just from experience, I've been doing this for 40 years. So sure enough, the next day, the thing bounced over 27%. That'd be like the Dow Jones Industrial Average jumping 27% in one day. But, so what we did, and again, remember, we said earlier in the week, we came in and we bought the FXI puts, the call options. Obviously, it was way oversold. So we thought it would be a great idea to come in. And we came in with the exact trade. We don't just say, hey, China's getting oversold, let's just buy any old thing. I just say, go ahead, you ought to think about buying it. I came in and said, listen, specific trade, we're going to buy the FXI, March 18th. That's the expiration date. $30. So I get the strike price, call option. So you give all the details. Not just, hey, you ought to buy some calls. No, the exact one. And sure enough, we bought them late in the day, about 3 o'clock in the afternoon on March 15th. And then again, this March 18th, again, that was the expiration date. That was the date that the options expired. But we bought them on the 15th. The next day, they opened up 1,000% because of that huge rally in the stock market, in their stock market overnight. Well, what did I do? I was like, well, usually up 1,000%, I'd say, ooh, don't look a gift horse in the mouth. Let's get out. But I knew that the Chinese government would keep buying. I knew they would keep supporting their market. I knew they'd keep pushing it higher. So sure enough, when it was up almost 3,000%, I finally said, okay, this is ridiculous. I know, I think it's going higher. I'm sure it's going higher, but we can't be greedy here. So we sold half at up about 3,000%. Then at the very end of the day, it had gone up so much. Again, I told people, I said, this is probably going higher. The Chinese government's going to keep supporting this, but we're up almost 8,000% on that. So our average price on the first half and the second half is going to be over 5,000%. Let's take the profits, and that's what we did. Some people held on, and sure enough, made it as much as 11,000% from what we were told. But this is the type of thing we do. Now, we don't get 8,000% gains all the time at all by any stretch of the imagination, but we do try to get. And I just want to give you a few other examples of some of the stuff we've been able to do here. I was going to go back here. Oops, see if I can get it. Sorry. But again, I showed you what we did with 170% just this past week. But this is something we've been able to do on a consistent basis. I mean, again, I told you about XSI. Let's go with the Apple Computer last year. A great example. Again, trying to use my experience. Let's see if I got the right one. Nope. And okay. There we go. Sorry about that. Okay, here we go. Apple Computer. Here's another example. This is back in May of last year. Remember when back in May, the stock market was going down a little bit, but the cryptocurrency market was getting crushed. But I kept noticing, I was like, oh, wait a minute here. Why is Apple down so much? Apple is down 10% in 5 days. If anything, Apple should be a flight to safety situation here. Why is this stock getting crushed? There was no new news out. It wasn't like, hey, iPhone sales are down or anything like that. Again, the market was down a little bit. Bitcoin was down a little bit. Obviously, we're relatively early in the bear market. So Apple going down in a couple of percent, several percent in 1 week wasn't a surprise, but it was down 10%. So what did I use? I used my experience. Number one, Apple was getting oversold on its technical chart. But number two, experience told me I figured out what was going on. We had what was going on in Bitcoin was the same thing that happened several times in the past, where Bitcoin and other cryptocurrencies were being sold through forced selling, margin calls, and those were not liquid securities. Even Bitcoin, which was the most liquid of them, the market wasn't liquid enough for people to sell enough of their enough of that asset to meet their margin calls. So they did what they always have to do. They had to sell something else. And I thought to myself, what would they buy? They're sure as heck going to buy General Electric or General Motors, some of these old, industry, old economy stocks. If they're buying cryptocurrencies, they own stocks like Apple Computer. Well, sure enough, I realized, oh my God, this stock's down 10% because these guys are selling what they do have, and that's Apple Computer. And of course, Apple's a very liquid stock, so they were able to sell it and raise their money. Well, sure enough, on May 12th, it was on a Thursday. Take it back. On May 11th, the cryptocurrency stabilized. On May 12th, the cryptocurrency market traded sideways. Bitcoin, Ethereum, they all traded sideways. Apple went down again. I'm like, Apple shouldn't be going down. It shouldn't be down anyway. It's just going down because of momentum. This cryptocurrency crash is fading. It may go lower, and of course it did, and I thought it would. But I said this is going to subside for a while. We're going to get a dead cat bounce in the cryptocurrency market. That means Apple is going to take off. So sure enough, late in the day that day, we bought the Apple May 13th, $143 calls, and sure enough, the stock bonds said those calls. I held on to them in the morning and sold them for over 400% profit in just one day. And again, I didn't get the exact bottom. If I'd held on longer, I would have made more. But it's like when you make 400% in just a few hours, and really, in less than 24 hours, if you start losing sleep and getting mad at yourself after making 400%, do not trade options because you will drive yourself nuts. If you ever get the exact bottom or the exact top on a trade, you are just lucky. Okay, and any great trader will tell you that. If you get both the exact top and the exact bottom, that's the luckiest thing in the world. It's all pure luck. But you can get those big gains and not worry about it. So if you just miss by a little bit, don't get excited. Don't get worried about it. But again, this was just an example that we did going through the year. I just want to see here a couple others. I mean, again, and we don't just do so. There's an individual stock. I showed you how we done the FXI, which was something on a foreign market. We try to do it wherever we can find a good situation. I'm going to show you something here on an ETF, a group sector ETF, which was whoops, and there we go. Bang. Okay, that was SQQQ. Well, here's another one. It's SQQQ in June. Okay, where we make. Where we get SQQQ, which is the inverse ETF of the QQQs. And we went in and we bought some call options there, and we sold half of them with a 200% gain the next day, and the other half with a 270% gain. So, these are the types of things that we go. I'm just trying to find, I'm sorry, I had a couple others here that I wanted to show you, but I seem to be off on. Okay, well, here's the Amazon calls. Now, another thing that we talk about these things in the chat room. This was an idea that wasn't my idea. And in fact, I didn't get engaged in the trade. It was people in the chat room that came up with the idea. They came on Amazon. Again, this was in May, where some people said, hey, every time the stock splits, the stock tends to go up. I'm going to buy some calls. What do you think? Well, I looked at it and I said, hey, that's a great idea. I had some other positions on at the time, so I didn't go for it. I'm kicking myself. Look at this. These people made, again, they did the same type of thing. They didn't sell it all at once, but they made, over a 500% a part of the position and over 1,500% on another one. So these are the types of things that we're trying to do. And hold on one second. Shoot. Okay. Escape. Here's another situation again in June where if we advanced micro devices, same type of thing. We made 146% in just a couple of days buying the AMD June calls. Let's see if we can just get through some of this. June XLE. This is the one I was talking about. XLE. Remember how I talked about how the I'm sorry. There we go. How I had become very, very bullish on the energy sector. Well, sure enough, by the time we got to June of last year, I started getting nervous on this situation. Let's see if I can find that. Darn Okay, well, anyway, the XLE, so we went in, and I can't show it right now, but I would just say we came in and we bought some puts on the XLE, which is the energy stock ETF, because I just saw that the stock market, that group, that sector had become way too overbought on a technical side. Sentiment had become way too bullish after a year and a half of rallying. So we came in and we bought some XLE puts. I'll show it to you in a minute. Later, just a few weeks later, it became oversold again. I came right back in, turned bullish again, bought the XLE June 30, $74 calls. Sure enough, 186% rally. Same thing, we do it in wheat. How do you want to buy wheat futures? Are you going to call some guy in Chicago at the Chicago Board of Trade and try to open a commodities account? No, we have the tools now. That's one of the biggest things that we're working on so far, is we have the tools that we didn't have 5 years ago. Or if we had them 5 years ago, but they weren't very liquid. Now they are. And we certainly didn't have them 10 years ago, and certainly not on a liquid basis. Now, you go, instead of having to set up a commodities account, you go and buy. No, I'm not a bad speller. I didn't spell wheat incorrectly. WEAT is the symbol for the wheat ETF. And sure enough, I realized that the wheat was getting ridiculously oversold. Remember, it rallied huge way in the spring, sold off in the summer. We bought the calls and got a great rally here. So, you can see how this is something where we are not tied to just the stock market. Here's another one, LABU, which is the biotech ETF. Leveraged ETF, 800%. That was in August. Whoops. Again, so the point is, we've had, and I showed you the one from the TLT that we had. From the TQQQ we did from earlier this, we sold yesterday. These work out really well. So I just wanted to give you an idea of how this thing's working out and the process we go by.
Yeah, no, absolutely, man. That's great stuff there, just to kind of show the folks really what you do there. Matt, so I'm getting a lot of questions about the chat room. I'm just going to go through this really quick, and then we can get back here into the discussion. But yes, guys, I posted the information in the chat where basically you can, join Matt's room. The schedule is Monday to Friday, 8 a.m. till 5 p.m. Matt's, around that time. And every entry, there's entries, exits, specific contract that you buy, specific contract that you sell. Everything has a buy and a sell alert. You can download the app Benzinga on your store, whatever you use, Apple or Android, and you can actually get push notifications. So no matter where you are, you will get the trade, you will get the entry, you will get the exit, and you can be on the chat room as well. It's live. Everybody's there. We got hundreds of people. I launched the chat room with Matt, and it's great. We have people from all over the world. You can be there in the chat. There's always people there. There's always people there. It's a workplace, literally. So, yes, we posted the link in the chat where you can join. The chat room is there. You also get 6 stock trade alerts, which are swings. Those are going to be sent to you by email. They're also a push notification. And yes, basically the chat room is only options, right? The chat room is only options. So let me know, folks, if you guys have any questions. We're posting the link to the checkout. And also, if you have a question, there's my email as well. And yeah, that kind of covers it. Also, there's a Tuesday session from 11:30 till about 12:30 around there that Matt does. It's 45 minutes around there, and it's just for the chat members. So entries, exits. Matt, is there anything you wanted to add there that maybe I missed out?
Yeah, just 2 things, and I'll talk about the second one in a little bit more detail. But the first thing is just talk about this Tuesday session, and what it is much like what we're doing here today, where we spend, it's 11:30 Eastern time every Tuesday at about 11:30. I do it on Tuesdays because you want to get into the week, but you don't want to get too far into the week. You want to. If I do it on Mondays, there's a lot of questions going on, and like for instance, most you don't get many earnings reports on a Monday. It's usually Tuesday through Thursday, and most of the bulk of the economic data, same type of thing. They don't really release on Mondays. So we get into the week and we goes for 45 minutes, sometimes an hour, and we talk about the stocks that we're looking at, the macro issues that we're looking at the day, and how the thing's playing out. So that's really, a lot of people really, really like that. And it was something we started, we're going to do, hey, we'll do this for 10, 15 minutes. And it just morphed into something that's gone to at least a half an hour and almost always 45 minutes and even sometimes an hour. And people ask questions. Hey, what about this stock? What about that stock? What about this option? Now, as Rodrigo said, we're talking about options, but and we also have a lot of different times where people will ask me about their stock owners, a stock they're looking at, a stock they already own. What do you think? These are the more long-term situations, which I don't have a problem, addressing and saying, hey, this is what I think. Hey, I like it. I don't like it. It's just so my point is that even though we do concentrate in the chat room on the options, we do it on a we do talk about individual stocks as well, and I'm going to talk about one in just 1 second. And the last thing just to mention is that we do in this chat room, we concentrate on puts and calls. Once in a while we'll do a strangle or a straddle, but we're not doing a lot of iron condors and things like that. We try to keep it simple, and like I said, in 2022 we were up significantly in a year where most people had a down year. So, but again, we try to keep it simple, stupid. We're not doing the big intense. Some chat rooms do that, then that's fine. That's just not really what we try to specialize in. But I just want to show this thing where we're talking about individual stocks. Here's a great situation. I talked earlier about how other people in the chat room have ideas. One of the biggest things and most important things you got to remember if you want to be an active trader is do not trade by yourself. All these people at the big hedge funds, they have big trading desks, or even some of them, aren't that big, but they're very successful. And maybe they have small trading desks, but they don't have, they have several people on it, and they're talking with each other every single day. Not only that, they have brokers, all the brokers. You think the guys at, again, I'm just making up, Paul Tudor Jones's firm, his traders are getting calls all day long from every brokerage firm on it. Have you seen this? Have you heard about this? Have you, are you aware that, this is what's going on in this group? Do you hear the news on this? If the best and the brightest, it's professional traders are getting that kind of input all day long, how in the world are you going to compete if you're just trading by yourself? So that's what I think the best things about working on this model. So it just allows you to get feedback from other people. And like I said, I'm not the only one in there talking. I'm not the only one giving ideas. And as I showed there on Amazon, there was that was Amazon. There's been quite a few others where other people are coming in and giving great ideas all the time. Now here's an interesting one that came from today on an individual stock rather than an option. This is one Southwest Airlines. And the symbol is LUV. Love. And why love? Why is that? Well, it's because they started, I think they're still based out of Love Fields in Dallas. But anyway, so we came in and they announced I'm going to get back to this earnings things because that's what we want to talk about, trading on earnings. But, they reported earnings, disaster, but we all knew it was going to be because the problems they had during the big storm, the big weather, the storm, the snowstorm, rainstorm throughout the country, and they got absolutely annihilated. Now they had the CEO came on the financial news today, and he was not the most. His answers, I didn't find him all that impressive. He was still a little bit defensive, and that's okay. I mean, it's just because somebody is aggressive, it doesn't mean that they're actually fixing the situation. So the fact that the guy was honest, but I just kind of commented just in passing in the chat room. I said, boy, I'd have a little more confidence if that guy was a little bit more, had a little bit more a positive outlook or a little bit more vim and vigor in his talk. And immediately somebody came into the chat room and said, well, that may be true, but I got to tell you, I was trying to fly to San Francisco to go over the San Francisco Dallas Cowboys game, and every flight was booked. And I tell you what, the only airline where all the flights were booked was Southwest Air. So people aren't running away from Southwest Air. I said, geez, that's really interesting feedback. So I pulled up the chart. I looked at it and said, well, wait a minute here. Yeah, you can see, like everything else in the last year, it's made a series of higher lows and lower highs and lower lows. But you can see how that 200-day moving average got a little bit above it there, but and rolled back over. Got right a little bit above it there, rolled back over. Got right up to it, rolled back over. Got right up to it, rolled back over. Got right up to it, rolled back over. Well, guess what? I'm going to be watching this stock. Okay, I went from in a flash. I went from, geez, that CEO didn't look all that impressive, and I'm sure he wouldn't be the CEO if he wasn't a smart guy. I just don't know him and know of him. But if he can turn things around, and he and his whole team can turn things around, okay, and this stock can break above that 200-day moving average, I'm jumping on board real fast now. And not only that, because we have all these things. Again, we want to combine all these different situations. So lower high, lower low, lower high, lower low, lower high, lower low, all the way down. Whoop, wait a minute, a higher low. If this turns out to stay a higher low and we follow that up with a higher high above $40 and above the 200-day moving average. So in other words, above $40 will give it a higher high above this area, take it meaningfully above the 200-day moving average. And that's the kind of thing that would tell me not only to buy the stock. So in other words, if you like the stock, great. If you think it's going to be a good turnaround, but then, okay, I like it here. I'm buying it at 30. I'm going to jump on board and add to my position by buying some call options out for a couple of weeks, because this thing's just going to take off on an airline taking off, but it is going to take off. So this is now, so this is something that I had nothing to do with. This is something that it started off on a one-off comment that I made, a great response from one of the people in the chat room. Other people jumped right in saying, yeah, I like this here, I like this aspect, I'm going to watch it, etc. So suddenly now we have something on our radar screen. They may work very, very well for us. And I tell you, we're going to get involved in this stock one way or the other, because if it breaks down below this level here, below those, early December, late December, early January lows, bang, see it right there? That's going to give it a lower, that's going to negate the whole thing. I said, this thing keeps rolling over and it breaks below that level, and it means, oops, didn't make a higher high. That's not going to be good. I'm going to buy some puts probably in that area. Okay. And of course, if it breaks below 30 and gives it, below those September lows, that's going to be really negative. And again, we'd be more, and again, we don't have to just play in that. We can play in other areas. We could look at other stocks. I mean, it's kind of like, again, remember what I talked about with the TQQQ call puts that we bought earlier this week? We saw that the Microsoft options were really, really expensive, and I said, we're just not going to buy those. Well, sure enough, I'm going to show you something here. Tesla, okay, here's another great situation. Tesla, we all knew they were going to report last night, right? And I said, I have no idea what it's going to be. Well, the stock's now starting to get a little overbought here, as you can see on this chart. Let me get rid of some of these lines because it just gets a little too busy. But this yellow line is the 50-day moving average. So the fact that it broke above it is bullish, but you can see it's starting to get overbought here. But my point was that everybody knows that whenever Tesla reports, it sees huge moves. So the market makers and the options were making huge. You had to pay a huge premium to buy those stocks. So what did we do? So what did I do? I said, I'm not going to play this in the Tesla because it's just too much of a pull it up here. Too much of a risky play. I don't know which way it's going to go. And I thought, well, the one thing though is that look at Rivian. Okay, the stock its options were very inexpensive. Okay, and so we went ahead and we looked at the options. We looked at the $19 calls. We looked at a strangle where we bought some $18 puts and the $19 calls. Well, sure enough, the stock opened at $19.88. Okay, the options were almost triple. And I said, so obviously you made way more than you would have lost on that's the whole idea of a strangle. I won't go into much of that, but you way more money on the call than you made on the put, and then you lost on the put. And then right at the opening, I said, let's not be greedy here, just get out of it. Well, sure enough, look, this is what Rivian did. Equity GIP. This is where the Rivian did today. As you can see, it opened on its highs. Let's get rid of that. Opened on its highs and traded straight down the rest of the day. We made a real nice profit on that. I miss it. I did not get involved in that trade, but I did put it in my picks. I said, hey, if you want to make this trade, this is the one you ought to do. And I came in and said right at the opening, sell them, get rid of them, get out, take your nice profit and move on. And that's the other thing that I don't think we neglected to say. Well, we do have a separate page that you can click on at any time that shows where I make those picks, because the chat room is a scrolling thing going all day long. Well, where are the picks? How am I going to scroll through all these things to try and find the picks? That's the page you can go at any given time. You're off walking the dog, you're doing your job, whatever. You come back and say, oh, 45 minutes ago, Matt said buy this. I'm going to go in and say, well, Matt, the stock has moved, the option has moved. Should I still buy this? Should I still buy this option? And I say yes or no. I say, hey, it still looks like a good trade. Well, it's moved a little bit, but I think it's still a good trade. It's like, oh no, it's working against us. We're actually getting out of the trade, or finally, no, it's already seen its move, and I'm about to take the profits. But either way, the point is that there's a place to see that. You don't have to scroll through. You don't have to be watching this all day long every day. It's just impossible to do. None of us can do that. I can't do that. Certainly, I'm playing catch up sometimes when I'm doing other things during the day, but I'll go back in there and I try to answer every question that's put forward to me. And again, this is one of the other things I want to point out, very, very important, that we do in the chat room is the education. We're constantly, that's that Tuesday meeting. We want to talk about what's going on in the markets. We want to talk about our trade ideas. We also want to talk about what's education aspects. There's so many things in the stock market that are kind of counterintuitive. I mean, one of the things is if everybody's bullish on something, that means it's like, well, great, I should buy it. It's like, actually, no, if everybody's bullish, it means there's nobody left to buy it. And it means sentiment is too strong and you want to take the other side and be a big contrarian. And let's face it, that's how Warren Buffett became a billionaire. When people were so bear, he did it all on the buy side, not in short things, but you go on the buy side, when people are so bearish and they just sell, get me out at any price, and the thing becomes really cheap, that's when he goes in and buys. He's really is a contrarian. He buys when there's blood in the streets and nobody else is willing to buy. Okay, now as we go on here, and we got about we definitely have some more time, and if we, I think I might just do this where I'll just kind of put my I have another laptop here and I'll do the interview, and maybe I'll put it over to the side. You can watch me do the interview. It's on CNBC Asia. Those of you who are in Asia, you can watch it either way. But anyway, because I'd like to keep going after I do the interview at 6 o'clock. Before we do that, let's talk a little bit about what's going on in the marketplace right now. This is something that one of the things that I've been talking about in a big way I write a market letter, the Maley report, at theMaleyReport.com. You can see it there. You can see some of the free ones that I give there. But we're in a situation that's very similar to 2022. I'm sorry, 2002, 2002, or 2003. Back in the 1990s, the stock market was pushed higher. Everybody thinks it was a new economy and all this stuff. That's not really what happened. But really what happened is that there was a massive amount of artificial liquidity pushed into the market because Y2K. Y2K was the year 2000. And what happened was in the early 1990s, mid 1990s, people realized all of the computers around the world, which only use 2 digits for the year, 92, 93, 94 was 92, 1992, 1993, 1994, but it was 93, 94. Somebody finally realized, oh my God, when we go from 1999 to 2000, it's going to go from 99 to 00, but the computer thinks the 00 is 1900. So if you have, so your bank account is going to show what you had in 1900. Given that the vast majority of people weren't alive in 1900, it would have meant everybody was worth 0. But the same thing, not just financial, not just in accounts, anything. It's like, oh, by the way, that $100 million you owe us is some big business transaction. Oh, you don't owe it anymore because it's 1900 and the transaction never took place. What? Literally, this is what happened. But they realized it in time, and they fled. All the central banks, global central banks, flooded the system with money. This is what really happened during that time, and all these prices got pushed up to artificially high levels, more artificially. The same thing happened in 2000 and 2021 when we had the pandemic. We all know that was all artificial, right? But we wanted to believe that it would hold up. Well, it didn't. What happened in 2000? In 2000, the 00s worked. All that money they spent was worked, and they said, okay, everything's fine. Let's pull the liquidity. Okay, what happened? Stock market straight down. Okay, this was not a coincidence that it happened topped out in early 2000. Now, and the S&P did go back and retest in October and then go down, but the Nasdaq went down, started down. They got about 1 month into it, realized everything was working fine. They didn't need liquidity anymore. That was the end of it. Well, guess what? Same thing happened at the beginning of last year, 2022. They pulled the liquidity and we're heading lower. And the problem is it takes more than a year to do it, because without that ultra level zero interest rates and a QE program, you can't have valuations like we had in 2021, 2021, and that we had in 1999, 2000. Okay, those are the only two times you've ever had valuations as ridiculous as that. Well, you go back to the late 1990s. That's, of course, a little bit different situation then. But they only really had the Dow Jones Industrial Average, and the S&P existed, but not really. But anyway, but the point is that people got used to this thing because they believe, oh, it's the low interest rates. It's like, well, yeah, but they're not that low anymore. In fact, they're up about 300%, 380%. Okay, we're at we were at zero. Now we're well over 3%. 3% is still low, but it's a lot lower, a lot higher than it used to be, and it's still twice as high as it was a year ago. Not only were they not pushing all that liquidity into the marketplace, what happens is these banks get all this money that's just pushed in. I mean, the Federal Reserve works in a way where they come in. You're a bank. You're a member bank, right? You are part of our Federal Reserve process. If we buy what they did, they went and buy securities. You have to sell them to us. You have to. It's not your choice. You have to sell them to us. And guess what? So we give you the money. What do you do with that money? We want you to turn around and loan it out obviously to help the economy. Well, guess what? They gave them too much money. And so what do? They put it into assets. And that's why the assets took off. They did this purposely. They wanted to push assets higher. Okay. But then but the problem was they figured, okay, once the economy, we all knew that the assets were way ahead of their underlying values. But then we thought, well, the economy will catch up. The problem is the Fed kept that liquidity program going too long, so they couldn't catch up. Well, now we are. And the thing is, they don't catch up at 18 times earnings like we are now. You catch up at 15 to 16 times earnings. Because if you don't, and people say, well, the last 10 years, if you go the last 50 years, you can't count the last 10 years because we've had QE for all of that time. All right. So the real fair value is somewhere in the 15 to 16 times earnings. That takes the stock market lower from here. And nobody is talking about earnings again. People saying, oh, the earnings aren't going to be as bad as they were. Again, if the stock market was fairly valued, that would be good. Again, like I said earlier, if the stock market was pricing in a really bad earnings season, the fact that they aren't really, really bad would be good. But the fact of the matter is they're pricing in a really good earnings season because we're trading at 18 times earnings. That's high on a historical basis. If we were trading at 15 times earnings or even 16 times earnings, I'd be saying everything's okay. The market is all this new money comes in at the beginning of the year each year. And if the market's going up, it wasn't going up last year, so people didn't have to put it to use. This year it was. The institutional investor has to put that money to use. They have to. They cannot sit on that cash, because if they fall behind after the first month, they're done. They play the whole year play to catch up. It never works that way. You have to be, if the market's moving, you've got to be in it beginning of the year, even if you think the world's coming to an end. You have to be in the market. And that's what they've been doing. Once that early money, 401k and all this new money comes in, once that subsides, then they can kind of pick and choose what they want to do. As that happens, and I think we'll go into that process starting about now. It won't happen right at January 31st. It might happen a few days earlier, a few days later, whatever. We realize that the earnings aren't very good. They're not going to go up from here. My point is, we don't need a recession, okay, to realize that this market is overvalued. Everybody keeps saying we're going to soft landing. That's fine. You know what? In 2000 to 2003, it was one of the mildest recessions on record. Very mild. Okay. And yet the stock market still got hit hard. I don't think it'll get hit as hard this time as it did last time, because the market isn't as overvalued as it was that time. But it still has to come down. It still has to work. It still has to normalize. We still have to go back to what the underlying, without that massive liquidity, we have to go back to what the fundamental values are for the marketplace. So I think we're going to get a lot more We did a little thing there. Sorry about that. Okay. So I hope we didn't get cut off, but if we did, I'm sorry, but we did. We were able to cover most of what I wanted to cover with what's going on. But I hope that the most important thing. I'm sorry, I keep looking off because that's where my the Skype. It's a Skype thing. Will let me know that they're looking for me, and we'll go ahead and do the interview with the people at CNBC Asia. But again, the number one thing though is that no matter what's going on here, I am, listen to all these layoffs. People are getting laid off. I mean, they're announcing all these layoffs, right? We have credit card debt at all-time highs. I'm not looking for the end of the world here. I'm not, it's my point is that this is very similar. When the stock market gets ridiculously expensive, like it did in the late 1999, early 2000, and they remove the liquidity, okay, it doesn't take a deep recession to hit the stock market more than usual. And that's what I think is going to go on when people, even though this rally in the first part of the year is good, it doesn't mean that it will last. And it doesn't mean the world's coming to an end either. But it does mean that we're probably going to get a better opportunity to buy, to buy, make those long-term purchases, because every single stock market, every single bear market since World War II, and maybe since before World War II, I've only gone back as far as World War II, every single bear market since World War II has bottomed at least 15 times earnings, never any higher than that. And sometimes as low as below 10 times earnings. I'm not looking for that, but I'm just saying that if this is like every other bear market, the chances are quite good that we still have further to go. However, I do think we will have a recession, and it doesn't have to be the end of the world recession. It could be like the one we had in 2000. So here we go. I'm going to pull this on here. So I'm going to put this over here. Hopefully you guys can see me. And, let's see that. You can kind of see what I'm doing there. We'll go from here. Whoops.
Right, Matt. So Matt's going to be doing the interview there, folks.
Hello.
It's on me. Got my commitment. It takes to fix our customers are sticking with us. We really need them, but if you look at March and beyond, the bookings are strong, the leisure bookings are strong, our managed business bookings are coming in strong. So there's a lot of evidence that our loyal customers are sticking with us.
Hello, Mr. Matt.
Yes, I can. How are you?
Do you spend enough on technology? And to me, when I read holiday meltdown exposed to Southwest Airlines,
Just to confirm, can you hear me now?
Yes, I can. Hear it loud and clear.
flight system, what I say to myself is, man, what a jump on that. That's fun.
How's that? Is that better?
And just with this whole ringing, sir, you can probably tilt down the camera and then skyward.
For cloud services, IBM, Microsoft, but
How's that?
specific on rescheduling. There's been a lot of discussion there.
And a touch screen or right?
As this,
It's a tiny touch.
we just had an absolute cascade of
How's that?
flight cancellations given the storm, and for so many days, that turned into a lot of
Just repeat audio check. Can you count 1 to 5?
Sure.
routing.
1, 2, 3, 4, 5.
Technical and our manual and processability to handle those. That was really the issue, not the software. We actually got a mix with GE Digital.
Is it possible to lower down the volume of your program so you can start again with the audio check?
How's that? I can go down more if you want. Oh,
sales.
okay.
Sales.
Oops,
You have any?
you got something? Yeah, hold on one second. Hold on a second.
Warehouses there.
You know, I think it's because of this thing. I'm gonna have to log off. I'm sorry. Sorry, guys.
Yeah, no worries, Matt. So basically, you want to wrap up the session here?
CEO Bernard Arnault was Richard Robson.
Okay, I don't think Matt can hear us, but okay, I don't think Matt can hear us, but basically Matt had to log on. Right now, he's on a live CNBC interview. But we posted the link to the chat room with the details. So you can do the annual or you could do the lifetime, whichever one. And the chat room is open Monday to Friday, 8 a.m. till 5 p.m. So also you do have a Tuesday session, which is from 11:30 till about 12:30. You get 3 to 5 trade alerts in the chat room, plus you get 6 email stock swing trade alerts. Those are going to be sent to you guys, right? It's part of the chat room. That way you can diversify your portfolio. But folks, I want to thank everybody here for being here. Definitely, we talked about the picks earlier in the day. Matt is looking at different trade ideas and setups. So I want to thank everybody. Thanks a lot for being here. Thanks for showing up. This has been a great session. We definitely covered a lot of topics here. Matt is a little bit short on time because of this interview, but just keep in mind, folks, he's in the chat room Monday to Friday, 8 a.m. till 5 p.m. So big shout out to everybody. We're going to put the contact info there as well, so you guys can join. Definitely, you want to be part of this community. Thanks a lot, E. Young, Lavin. Thanks a lot, folks. Yes, so if there's questions on Pro or all that sort of stuff, separate things, Lavin, send me an email and I'll be happy to go over all that stuff with you guys. Thanks a lot. Have a great day, and we'll see you guys in the chat room.